John Hook's Newsmaker starts now.
Thanks for joining us on Newsmaker. With housing prices still very high in the Phoenix area, it begs the age-old question, should I buy or should I rent? Justin Steltenpohl is the CEO of PB Bell. That's a firm marking 50 years now in the Valley. They develop and manage multifamily housing communities throughout Arizona. Thank you, Justin, for being here. We appreciate it.
Thank you for having me.
Okay, so what's the story right now on rents? You do a lot of high-end apartment complexes. Rent right now, let's see. It looks like rent is going somewhere for a one-bedroom in Phoenix, averages about $1,200 a month. But for all bedrooms, if these are more bedrooms, the average is about $1,800. Is that about right?
Yeah, that's about right. That tracks with what we're seeing in the market. Over the course of the last probably year and a half, 2 years, I would say rents have been decreasing from their highs in the 2023 timeframe. And we're currently in what we would refer to as a concessionary market, where a lot of our properties, especially the new builds that are currently in lease up, are offering concessions.
So what has happened? Is it because the housing market got so overheated that people were pretty much priced out and they moved into apartments?
I would say that for the most part, the reason that the growth in rent occurred from 2014-ish to 2022, 23 occurred for a variety of reasons. It was primarily the number of people moving into the Valley, especially during the COVID pandemic. We had a lot of in-migration. We were originally, 10 years ago, we were a very affordable community. And I think that affordability has changed recently. As you note, housing has gone up significantly in the Valley. The percentage of income it takes for somebody to own a house has increased to about 47%, which is just below or right about the national average, whereas 10 years ago we were 3 percentage points below the national average and considered a very affordable market. That's not the case today, and I think it does make renting more attractive, especially in the high interest environments.
That's the other part, is the interest rates are causing a lot of people, if they have to relocate, they don't want to jump into a high mortgage. Right now, I think mortgage rates across the country, well, according to Zillow, at least fixed mortgage 30-year in Arizona, that's hovering around 6 to 6.3%. Now, historically, that is not that's not outlandish, but when people got stuck on 3%, it seems like a lot.
Yeah, everything is relative, I've learned. I remember as a kid, my parents were thrilled when they refinanced the house to a 17% interest.
Exactly.
We wouldn't accept that on a credit card.
Yeah, exactly.
Everybody did. Everybody got used to the 3% and thought that was going to last forever. Obviously, it didn't. As you note, 6% is still a very good interest rate, but when you're paying 3% and you go to 6%, that's a significant amount of money in an interest payment every single month, and it does impact affordability. I think more importantly, it's the stability of the rate versus the rate itself. The market is excellent at adjusting as long as they understand what they're adjusting to. Nobody wants to jump in and buy that house if market rate or interest rate is fluctuating. That they're gonna hold off and see if it's gonna come down a little bit more. Doesn't matter if it's 6% or 4%. When it dropped to 4%, there wasn't a rush of people out there refinancing. They're all waiting to see if it went down to 3%.
Yeah. So Justin, tell me, is there a generational thing happening as well, that the younger generation may not want to be burdened by a house and all that comes with it?
It's interesting you say that. My daughter, who's 23 years old, just said that to me today. She said that she doesn't want to buy a house because she doesn't want to be tied down with the burden. I think there's that. I think there's also, if you think about the home buyer, the first-time home buyer coming into the market today, they were a relatively young person when the housing crisis of 2007, 8, 9, 10 occurred. And they saw their parents struggling and possibly losing their home and losing a significant portion of their equity that was in that house. And I think that can have a negative impact, a lasting impact on those individuals as well.
Yeah, we keep talking about the dream of owning a home, but some of that dream seems to be a mirage for younger people. They are much more into experiences and traveling and doing stuff. And even successful young people who've got the money, they look at it and say, I'd rather have that disposable income than have it tied up in a house.
That's very true. Most of our renters, in fact, are what we call renter by choice, where they could afford to buy a home if they chose to, but they would prefer, whether it's, they want to live in an environment where maybe there really isn't a lot of housing. Think, Kierland or, downtown Phoenix. They want that environment, or they just want the extra income so that they can go travel the world.
Yeah. Are you in competition with the traditional housing market? Do you guys see them as competitors, or how do you view the entire real estate paradigm?
I don't view them as competitors. I think that we're going after two different demographics. There's people that want to live in homes, and the people that want to own a home and want to buy a home. They might rent when they first move into a market, but they will look for that home. And we actually have provisions in our leases where you can terminate. Obviously, there's a little bit of a payment for that, but you can terminate the lease early to buy a house.
That's interesting. What are people looking for now in apartment living?
I think they're looking primarily for, ironically enough, the biggest thing they want is a strong cell signal. A strong cell signal, good Wi-Fi, and they just want ease. They wanted a turnkey. They want to walk in, have their internet ready, they plug in their TV, they've got everything they need. I think a lot of our amenity spaces, the fitness centers, private work areas, we set up a lot of conference rooms, just individual conference rooms. We have TVs in them where they can be like a little WeWork space. And those are heavily utilized in doing conference calls. There's a lot of still work from home, and people really like that.
How many people do you have who are renting who are on the road a lot? They are traveling for their business. They can't deal with, pool maintenance and all the stuff that goes with it. They want to be able to leave if they have to for 2 weeks, especially in this economy. There's a lot of that.
Yeah, we have quite a few folks that rent our apartments. We don't keep specific stats on percentages, but when you look at, again, the use we have of those facilities, the private workstations and things of that nature, we have a lot of people that they're just looking for a turnkey environment. They may rent in multiple cities, and Phoenix is just one of them.
What do you do about people who come in and say, I want it furnished? Can you handle that? Can you do that?
That's not what we do.
Okay.
We will refer them. There's plenty of companies that will rent furniture out and things of that nature. And we can refer them to some of those companies, but that's going to be their responsibility.
Because when you talk about turnkey, if somebody's coming into town and they're on the road a lot, they sell maybe in the western U.S. and they're on the road a lot, they may say, hey, look, I want this thing to be turnkey. I want to be able to walk in and have it done and then hook up my devices and you're ready to go.
Yeah, and we can, again, we'll refer them to folks where they can come in and get that experience. Or we can assist, if they want to have furniture delivered, our maintenance guys will open the door and let them in to do their furniture if they want us to. We definitely try to take a concierge approach with our residents. But we won't actually, we have a couple properties where the owners will set up a corporate unit that's rented on a nightly basis.
There you go.
But we offer a furnished unit.
Okay, so in a big complex that you do, let's say a fairly high-end one, how many would be 1 bedroom, 2 bedroom, 3? How do you usually break it up?
Yeah, it's pretty common. It's about 40% 1, 50% 2, and 10% 3 bedrooms, depending upon the product type. Like in a high-rise, you probably wouldn't have that many 3 bedrooms, and you'd throw in some studios instead.
Oh, interesting. Okay, so 1 bedroom is still a pretty good chunk.
Yeah, a lot of them are 1 bedrooms.
About 40%, you said.
That's correct.
Where do you see the market going now? Because we're seeing prices kind of stall a little bit. In fact, home prices here are starting to decline, and actually in some of the Sun Belt areas in the United States, Miami, Tampa, Phoenix, we're seeing some price declines finally.
I think the housing market, you're going to see as the rates continue to come down, I think you're going to see some folks jump into that first-time home buyer, or, they're not going to be locked into their existing home anymore, and they're going to go try and find a new, maybe an upgrade, or sometimes even a downgrade if they're empty nesters. So I think you will see that pick up. Everything I'm reading and seeing in the housing market right now indicates the Phoenix housing market is actually structurally very sound right now. The fears of a fallout are unfounded when you look at the demographics. It's actually very, very structurally sound right now.
Just give me a macro view here. As you mentioned at the top of the program, affordability here was always kind of a big selling point. Typical home across the nation now costs $363,000. Here in Arizona, it's now $419,000. Why do you think that is? Is this a supply issue, a demand issue? What is it?
I think it was a demand issue, and I think a lot of it occurred because we were so affordable. We've had a lot of in-migration, and even people say that in-migration into Phoenix is slowing down, and it is slowing down.
Yeah, there was a story about it today as we're taping that the migration is slowing down a bit. Does that alarm you at all?
No, because it's still greater. We're still in the top 10. It went from number 6 to number 7, and that doesn't concern me. It's still a great place to live. There's a lot of positives about Phoenix. There's a lot of positives about Arizona, and I think you're going to continue to see that in-migration. One of the reasons that our overall population isn't accelerating as quickly as it is because the birth-to-death rates, the net from that is actually decreasing. It's supposed to be decreasing starting, it's going to be negative starting, I think, in 2040, I heard, based upon current projections. So what was normally a large source of additional population is dwindling as kids or people are waiting longer to have kids.
Yeah, waiting longer or not having them. We've seen that in school districts, which, as we know, are closing properties and schools because they don't have kids to fill the seats.
Yep.
Final thing, as you look forward to 2026, what do you see overall in the real estate market?
I think 2026 is going to be, I think you're going to continue a little bit of the correction. I'm not looking for drastic changes anywhere. I think home prices are going to stabilize. I think rent is going to stabilize. And I think by the end of the year, both of those, I think your housing is going to start to increase a little bit. Home prices are going to start to increase a little bit. And I think rent is going to start to tick up. Again, both of those occurring probably in the fourth quarter.
Okay, we appreciate your time. Justin Steltenpohl, CEO of PB Bell, a firm marking 50 years in the Valley. They develop big properties, big apartment properties. We appreciate your time, Justin. Good to see you. Happy New Year.
Thank you. Happy New Year as well.
All right, we'll see you soon. We're back in a minute on Newsmaker.